Real estate investment is considered one of the most profitable long-term investments ever. Do you know you can invest in real estate with little to no money? Do you know you can make money in real estate without owning any property? Stay tuned as we discuss the best ways to invest in real estate. Over the years, real estate investment has been considered one of the best ways to invest your money and grow your wealth. It has become a popular choice for most investors, ranging from big-time investors to homeowners looking to have a little extra money for retirement. With more and more people entering the world of real estate investing year after year, it's no secret that funding for real estate investments is becoming increasingly difficult for the average person. With housing materials seeing double-digit increases due to inflation in recent years, many people believe it is too difficult to become a real estate investor and does not have the funds to cover the high cost of getting started. This is not the case, as there are numerous ways for an individual to invest in real estate, though you can only take advantage of these opportunities if you know about them. So let's get started. The number 4 on the list is real estate investment trusts, REITs. A real estate investment trust is one in which a company owns, operates, or finances properties and real estate ventures. Like mutual funds or exchange-traded funds, ETFs, they own a basket of assets rather than just one. Investors purchase REIT shares like they would buy a stock or mutual fund share and earn a share of the income generated by those assets, allowing you to reap the benefits of the real estate market with much less initial capital. Although investing in an REIT does not imply ownership of the properties, this can be viewed positively. Because you don't own any property, you don't have to worry about property management or maintenance, making REITs a much more hands-off investment. REITs also provide very competitive returns compared to other types of investments, such as stocks, making them both convenient and practical. You can also lend your money to realtors and earn fixed returns. We will discuss this soon, so watch till the end. The number 3 on the list is real estate crowdfunding. Real estate crowdfunding, like traditional crowdfunding, is a method of raising capital for real estate projects. Many individual investors pool their funds in order to purchase real estate properties.
Crowdfunding is basically where people can pull their money together and put it in business, they can put it in real estate, they can put it towards deals. Bottom line is that we live in such a small world today with technology that people can come together and make deals happen that couldn't before.
It's done through online platforms like Crowdbase, which connects real estate developers with interested investors. Investors receive equity in a development project, and in successful cases, monthly or quarterly distributions in exchange for their money. Individuals can easily find and invest in exciting real estate projects without worrying about the size of their investment or the property's condition. Real estate crowdfunding is especially popular for innovative and socially impactful community projects. Individuals can create accounts on crowdfunding sites and select a specific investing strategy based on their goals, with brokers diversifying your money across a series of investment funds. A 24/7 online dashboard allows individuals to track the progress of the money they invested. This investment comes in 2 varieties. The equity investment gives you direct ownership of a property or company that manages or owns the property. This type of investor has unlimited upside potential, but is also the first to bear any losses. If market rents or property prices rise, equity holders will continue to profit. If market rents fall to the point where the property must be liquidated, equity holders face a significant loss in their investments. Some people also want full ownership in their investments. If this is you, you can consider being a landlord. We will discuss this soon, so keep watching. The second category is debt investors. Debt investors lend money to sponsors to finance a real estate project. Depending on the deal's structure, debt investments typically provide fixed, regular payments until maturity. Kindly subscribe to the channel and press the bell icon to be notified anytime we post new insightful videos like this one. Number 2 on the list is house flipping. House flipping has become a more popular way to invest in real estate, but it requires a keen eye for value and more operational expertise than any other methods discussed. However, taking this route may help you get a faster return on your investment. Typically, this real estate investment entails locating undervalued properties that require cleaning or renovation. Investors make the necessary changes before charging market value for their homes, profiting from the difference between their cost and the sales price. To be successful, you must always be prepared for unanticipated problems, such as budget increases, a longer renovation timeline, and market selling issues. It's essential to surround yourself with experts you can rely on, such as contractors, realtors, lenders, and others.
Once you pick your market, you've got to go on to step 2, which is to build your team. Now, your team is going to consist of 4 core members: a contractor, a realtor, a title officer, and a lender. Eventually, you'll have multiple people who can fill this role, but for now, as a beginner, make sure you're focusing on finding one person in each of these categories. Obviously, your contractor is going to be the one who helps you fix up the house. Your realtor is going to be the person that helps you sell the house. The title officer, or sometimes called the escrow officer, is going to be the one that handles the transaction of the sale. And your lender is going to be the person who funds the deal.
Buying out the whole building alleviates the search for many experts, and you can earn money through online rentals. We will discuss this soon. The methods for flipping a house differ from one property to the next. To make a property livable, investors may need near-complete renovations, or even rebuild it in some flips. In other cases, investors will only make cosmetic or even technological changes to the house to make it more appealing to potential buyers. But the changes to the house itself will be minor. Microflips are flips that require only a tiny amount of effort and can happen quickly. People who do microflipping usually try to turn over a high volume of homes as a profit strategy because they buy and sell a lot of houses. Number 1 on the list is becoming a landlord. According to many investors, buying and renting a home is the best way to invest in real estate. Your monthly mortgage payment should ideally be relatively fixed while rent prices rise, increasing the money you generate over time. In comparison to commercial properties, one of the most significant advantages of this type of property is that you know the market standards, and the market may be easier to predict. An investor in this type of investment can buy a multi-unit building and live in one of the units alone or with family while renting out the remaining units. This reduces expenses while also generating income to cover mortgage payments and rents. In this day and age of online rentals, landlords may prefer to rent their apartments through online platforms such as Airbnb rather than taking on long-term tenants. Or they may be able to do both and still make a profit. Even though being a landlord can be advantageous, you must constantly maintain the property, which can be costly sometimes, particularly during high inflation. It is no surprise that most real estate investors have a lot of money to work with to make it work for them. However, if you lack upfront funds, some of the options discussed can help you take advantage of the real estate market while spending less money. Finally, the viability of each option will be determined by your own experience. Therefore, spend time educating yourself about real estate investment before diving in.